What up, what up, what up? Thommy Kane in the house. I'm finally doing it. I'm finally here. Welcome all my homies and haters. You know what I'm saying? For another episode of the Executives Playbook with Thommy Kane. I'm Thommy Kane. So a couple things. First, I want to talk about why we are in debt as a country. The American national debt. What is it? Why does it exist? What's the real reason? What is the real reason why it exists? Not the bullcrap reasons that everybody wants to throw at you. The real reasons. So we're going to get into that. But before we talk about that, I think I owe it to everybody on this channel to kind of explain a couple of things about why I have not uploaded a video since July. So when many of you know, I was on the East Coast and I was absolutely killing it, having a good time, playing with my son, teaching him how to build computers. It was such a fun time. But I had been making videos from my car, as some of you knew. The reason why was because my space at my apartment in Los Angeles, where I live, I wasn't able to use it because I was on the East Coast. But then when I got back and I had to hook my camera stuff up and get it back together, it was very demotivating because I wasn't very happy with the space. I wasn't very happy with the way things were looking. I wanted something a little more pro. So that doesn't mean everyone's like, well, you could have been making videos the whole time, and that's true. I could have been. But it was tumultuous because I went to find a space that I could use to be able to record in that would be large enough and, within, a short distance of where I live and so on and so forth. And then after I found it, I had to do a lot of work on it. A lot of work. I had to, everything you see behind me, everything in this space I hand did everything. I mean, I built all the cabinets and I ordered this Executives Playbook light. I did all this stuff to get a professional space going. And what's great about my space, because there's two things that I like to do. I like to make videos where I'm talking directly to you, but I'm also a big fan of interviewing people. And that's really what I want this show to be based on. However, as I'm sure many of you know, getting off the ground in the beginning, it becomes hard to have enough people where you have content daily. And I really want to be able to talk about stuff daily. Now, for those of you that are curious as to what my channel is about, the Executives Playbook, I had a guy ask me the other day if it was about sports. I started laughing. No, it's not betting. It's not betting on sports. At the end of the day, it's about money and business and success and in some ways politics, but current events. But what it really is about is it's important. I always felt, because I was a street kid, homeless kid on the street that grew up with absolutely nothing. Those of you who know the story, you know it. Those of you who don't, I came up very, very grimy, raised in crack houses. My mother was a drug addict, criminal, in and out of jail, ran a prostitution ring out of the apartment, just crazy stuff. And I feel like the internet was not really that much of a thing until I was about 19 or 20. And then even then, it wasn't like what it is now. I mean, obviously. I mean, information was very hard to find still. And there wasn't a lot of people putting information on the internet. And I feel like if I had had knowledge about money and business and interest rates and economics and understood how things worked, and if I had good mentorship, good people that, weren't drug addicts running crime syndicates out of the apartment I lived in, then I probably would have had a decided advantage in life. But I didn't have those things. It wasn't until I was in my mid-30s when I decided to even go to college And I took business, and I don't regret it one bit, because it allowed me to do the things that I now do now with my business that has brought me to a place where I can be successful enough to even do everything that I'm doing right now. So that being said, I want to have good conversations with intelligent people. There's a phrase that I don't know who's famous for saying it, but the quote is, "If I've seen further, it was from standing on the shoulders of giants." And I can't stress to you enough that that's what I want this to be. I want to interview giants, and I want the people who are interested enough in these conversations to walk away having learned something, so that they could feel like they just got access to really good information. Now, me, I don't know everything, and I'm still learning on a regular basis. I am still learning, especially about money and business. My goodness, it's a journey that words cannot describe. It's like every day there's another overwhelming amount of things that are coming down the pipeline, and you're navigating and having to figure out what to do. So I too, when I'm interviewing these people, want to learn from these people. And so I'm going to ask the questions that I know you want to ask. And that is my argument to you, why you should hit that subscribe button, why you should follow this channel, and hopefully we can all learn things together. Now, that being said, I'm going to segue that into what this video is about, which is about the national debt. There seems to be, and has been for quite some time now, a massive misunderstanding about the national debt. And what that misunderstanding is that everybody wants to talk about that the reason why America is so in debt is because of the spending. It's the spending, the spending, the spending, the spending. And it's just not true. It is absolutely not true. It has nothing to do with that. But the reason why that argument is made is because billionaires and the ultra wealthy, who control most of all the information we get anyways, they don't want you to know the truth. They don't want you to know the truth about where this national debt comes from, because there's two things that cause a national debt. One of them could be spending. The other one could be money going in the first place, right? So now, who has the money to put in? Well, rich people, billionaires. Who needs the money when it's being spent? Poor people. People that have nothing, people that need help. So naturally, there's going to be an argument from the top to convince people that we're in a national debt because of you, because you're needy, because you're poor, because you need something. And that's just not true. And it's just absolutely not true. So what I wanted to talk about today, what I wanted to say about this, and hopefully anyone who tunes into this walks away having learned something from this video. Let's start by explaining what the national debt is. The national debt. Who are we in debt to? Well, for starters, we're in debt to people. Who are those people? Anyone. So now you must be like, what? Scratching your head. No, literally, it's anyone. It could be a person in Japan. It could be an investor in the United States. It's anyone. How do we owe all these people money? Well, because the government uses treasury bonds as a way to get money. They issue bonds. So investors who might have money in the stock market might sell their stocks or might take a certain amount of money of that portfolio and say, you know what, I want to make a less riskier investment. I'm going to buy some treasury bonds, because treasury bonds and the value of them hinges upon the value of the dollar. Very important that you understand that, because we're going to get into that in a minute, even further. But my necklace keeps making me itch, and I don't know why. It's not fake, I promise. It's just sweat. Anyway. So anyways, the value of the dollar if it were to tank tomorrow, we'd be in big trouble because our treasury bonds would be worth nothing, zero. Because, or not zero, but definitely not the value that they're worth now. And right now, the US dollar has been accepted as the dollar of all trade, essentially, around the globe. Right now, it is, and has been for a while, which is why it's strong and why treasury bonds have value. So I could get further into this, but that would be an entirely different video. So anyways, that being said, people buy treasury bonds. Could be, like I said, it could be a corporation in China, could be an investor in Boston. Doesn't matter who it is. Now, well, did people do this in the 1920s? In the 1930s? Yes, they did. What happened to those treasury bonds? Well, if they never cashed them in, and in many cases they didn't, they died. Those people died, and those treasury bonds were inherited by their kids or their grandkids, etc. So now because of this, you have people, these young people, with trusts that have lots of treasury bonds in them that have a valuation, obviously, but they're not trying to cash them in. They're not trying to sell them. They're not like trying to go, okay, government, I want all the money back. Here's your bonds back. Give us my money. They're not doing that. Thank goodness. Because if everybody did that at once, well, we would absolutely go bust because we would owe, what is the current national debt? What is the current national debt? Let's find out. $38 trillion, right? So if everybody were to cash in right now to try to get that money back, we would owe $38.4 trillion more dollars than we have to give. That's what the debt is. That's what it means. Now, the only thing that would make everybody want to cash in all their bonds is if the US dollar no longer was widely accepted as the main, trade currency around the globe. If that were to happen, because another currency was stronger or more stable, for whatever reason, or another superpower like China emerged, if that were to happen, then yeah, everybody would go, whoa, US dollar's about to go bust. Let me cash these treasury bonds in immediately. And then, of course, we would be toast. We would be absolutely done. $30.8 trillion, 30.8 of it is held by the general public. 30.8 trillion. That's what we owe just people who have treasury bonds that are floating out in the world, okay? So, all right, now you're saying, well, tell us how we wound up in this debt. Well, that's what I'm going to tell you. So, back in the day, when Franklin D. Roosevelt was president, he was taxing the rich. He was taxing the rich heavily. We're talking like 90% and higher tax rates. Now, you might say 90%. What does that mean? A rich person has to give 90% of their money to the government? No, they were marginal tax rates. And that's why I have this video here for you, because I'm going to let him, because he does it so well, explain exactly how marginal tax rates work. So let's listen to this together and just follow along for a second.
Example is this table from a fictitious country called Midgard. 0% tax on your first $20,000 of taxable income, then 30% on the next bracket of $20,000 taxable income, then 40% on the next bracket of $20,000, and 50% on any taxable income above that.
So when you're looking at this, okay, this is a progressive tax rate. When you're looking at this, you could see that on the first 20 grand you make, you don't owe any money on it at all. But on the next 20 grand that you made, you owe 30%. On the next 20 grand that you make, you owe 40%. This is a progressive tax rate system. All right, hold on a minute. I'm trying to find the marginal. We're going to keep watching this.
Let's calculate how much tax John owes. He has a taxable income of $50,000. Step 1 is to split that $50,000 over the tax brackets. $50,000 fills both of the first two brackets fully, it fills half of the third bracket and none of the fourth bracket. Then we apply the tax rate for each tax bracket. 0% tax on the first $20,000 of taxable income. 30% tax on the next $20,000 of taxable income, which is $6,000 tax owed. 40% on his remaining $10,000 of taxable income, which is $4,000 tax owed. In total, $10,000 tax is owed on the taxable income of $50,000. We could say that John makes $50,000 gross and $40,000 net.
So basically, because of this progressive tax rate, this Joe fella made 50 grand and had to give $10,000 to the IRS. Now, that is just your standard progressive tax rate. We're going to get into marginal now.
Tax rate is the tax rate an individual would pay on The marginal tax rate is the tax rate an individual would pay on one additional dollar of income.
The marginal tax rate is the tax rate an individual would pay on one additional dollar of income. Meaning that they set a margin. So if you make 50 grand and you have a marginal tax rate at $50,000 of, say, 10%, that doesn't mean you give 10% of that $50,000. It means that any dollar you make past $50,000, you owe 10% on. That would be a 10%, excuse me, coffee makes me burp. You would owe 10% of your $1. So if you made $50,001, you would owe 10 cents in taxes on that $50,001 at a $50,000 marginal tax rate of 10%. So understanding that, let's listen.
John's average tax rate is the $10,000 tax owed divided by his gross income of $50,000, which is 20%. In the progressive income tax system, the average tax rate is always lower than the marginal tax rate. Let's calculate as well how much tax Jane owes. She has a taxable income of $70,000. Same procedure. Split the taxable income over the various tax brackets. $70,000 fills all of the first three brackets fully and places the last $10,000 of income into the fourth bracket. Apply the tax rate to each taxable income bracket. Jane owes $90,000 in taxes on her $70,000 taxable income. Her gross income is $70,000, her net income is $51,000. Jane's marginal tax rate is 50%. She would pay 50 cents additional tax on one additional dollar of income. Jane's average tax rate is the $90,000 tax owed divided by her gross income of $70,000, which is 7%.
So that is the average tax rate is 27%, but it's averaging at 27% because she has a marginal tax rate of 50%. Now, the reason why I'm teaching you about taxes right now is because when FDR was giving people 90% marginal tax rates, he was doing it to the ultra wealthy. He was basically saying, if you continue to follow this progressive chart, if you get to the point where you're making, as you can see, the tax rate climbs, you're making $1 million or $5 million or $20 million or $100 million, then the marginal tax rate would be significantly higher. And so that was the way that money was going into the government. Money going into the government. Okay? So now, when you give people a 90+% tax rate that make tens of millions of dollars, marginal tax rate, that results in tons of money going into the government. The government becomes rich with money. insane amounts of money to go around. And so if people are starving, we can afford to put money into, food programs, and, we can afford to help people get housing when they're starving, or I'm sorry, when they're homeless on the street and they have nowhere to sleep. We can afford to give people health care if they're sick and they don't have insurance or don't have a job to pay insurance. We can afford that abundantly when there's money going in. So to put it like this, imagine you have a household, mom, dad, 3 kids, 5 people. You're all in the house. Let's say the 3 kids are all, 16 and older. So that, maybe 16, 18, and 20, okay? But they all still live at home with mom and dad. You have 5 people living in a house. So all of a sudden, dad says, hey, I got an idea. Why don't we all put $10 of our money that we make every month into this cookie jar, okay? We're all going to put $10 every month into this cookie jar, and then whenever we need to spend money on the water heater breaks, or we need the lawn needs to be mowed, that's keeping up with the house, or maybe we need a landscaper to come, trim down the trees that are coming into our roof, or whatever, right? So any kind of expenses around the house, we're going to go ahead and take care of it with this till, okay? One of the other expenses we're also going to take care of is food. We all eat the food in the house. So we're going to take this $10 that we put in this jar every month, and we're going to use it to buy excess food, things like that in the house. Like if we want, more bread, more milk, more cereal, whatever that, oatmeal, whatever we want, right? Be some extra things for food and things like that. And then all of a sudden, one of the people who are in the house comes up and says, you know what? I don't really want to do $10. I want to do $5. And then another person says, yeah, I agree with that. Let's do $5. Then everyone in the family says $5. Now, all of a sudden, the dad says, you know what? I don't really like doing $5 every month. Let's do $2. And the mom says, you know what? You're right. Let's do $2. And all of a sudden, everybody starts putting $2 in. Well, what ends up happening, imagine now in this scenario, when there's no money to do anything, that they start complaining, well, we would have money if we didn't have trees growing into the roof more than usual, or you're eating more food out of the fridge. Slow down. Stop eating so much food out of the fridge. That's stupid. That's not the reason why there isn't any money. The reason why there isn't any money is because you guys stopped putting money in. You went from 10 to 5 to 2. And that is the issue. So it is a statistical fact that if we, and you guys could use AI for this, ChatGPT it if you want to, look it up with calculators. I don't care where you go to process this information, or to verify this information, rather. I don't care where you go to get your verification. Run any numbers. If we would still have the marginal tax rate that we had on the ultra wealthy in the 80s, we would be solvent as a nation. One more time for the people in the back. If we still had the marginal tax rates that we had put in place in the 80s on the ultra wealthy, America would be solvent. For those of you who don't know what solvent means, and I'm not trying to say that to insult your intelligence, some people have better vocabularies. It means we would have a surplus of money. We would have no debt. Zero debt. Not $38.4 trillion in debt. We would have zero debt. Zero. We would have a surplus. The government would have way more money than we even owe in treasury bonds. And that's the truth. So the question is, well, why don't we? Why did we stop putting this marginal tax rate on the ultra wealthy? Well, I'll tell you why. Because the ultra wealthy using their money after Buckley v. Vallejo passed and allowed them to fund campaigns, campaign finance and all that became legal. Being able to spend seas of money just became legal at that point when Buckley v. Vallejo was passed. And the rich people basically said, okay, let me finance these senators' campaigns, these representatives' campaigns, and have them pass legislation to reduce and continue to reduce, including financing presidencies, and, convince them, slash the taxes on the rich, slash the taxes on the rich. And they did this by saying, well, we're the ones creating all the businesses. We're the ones creating all the jobs. You know what? First of all, that's not true. It's not true. They haven't been creating all the jobs. They've been outsourcing, they've been offshoring their money to offshore bank accounts, sitting on untold wealth, doing nothing with it. In fact, what they've been doing with it is they've been using it to secure more assets. They've been using it to secure more stocks, especially stocks that yield dividends. And what that means is that's another whole video I'll make, but they're buying stocks that give out an annual dividend every year. And then they don't need to spend that annual dividend. They could just go out and they could borrow money from banks and get lines of credit against the money that their money is just generating every year sitting in stocks. So they never realize that money. So if they sell that, it's called a realized gain. They then would have to pay taxes on that realized gain. So to avoid paying taxes, again, they're not really creating businesses and more jobs and more whatever. They're not doing that at all. They're just giving themselves more and more money and creating more and more wealth for themselves by buying more shares of stock and getting more dividends and then borrowing from the bank, taking on more debt to then use that debt to buy more things that yield more cash flow and so on and so forth. And so their wealth gets bigger and bigger and bigger and bigger and bigger, but they're not spending it or investing it anywhere. They're not doing that at all whatsoever. And even the ones who are, even if there are some businesses that are starting or this and that, or they're creating new, ventures, they're not paying anybody enough to live on. They're making wages so low to keep those profits coming in that even if they were creating jobs, it's not like they're creating livable wage jobs. And so this is where I try to explain to anybody who's watching this that when they're telling you we got to slash healthcare, we got to stop taking care of student loans, we got to stop subsidizing colleges and education, we got to stop taking care of the roads, we got to stop taking care of infrastructure and bridges, we got to stop taking care of food programs and making sure people can eat, and housing programs, we got to make sure people suffer because, hey, we're $38.4 trillion in debt. No, that's not why we're in debt, and that's not at all the problem. The problem is that the ultra rich are telling you we don't want to pay taxes. We don't want to pay into this system, and that's why we're in debt. But we're not going to tell you that. We're not going to say that. We're going to spread the lie that it's the guy living off of food stamps who needs health care and Medicaid, who needs housing programs, why America's in debt. And that's an out-and-out lie. And at the end of the day, that is just, once again, why America is suffering, because of greed. And I, being a capitalist, I love capitalism. I would never support in any way communism. I would never support in any way socialism. I don't like either of those programs. I don't, or systems, I guess you could say. I don't like either of those government systems. I like an open and free market. I like capitalism, but for it to work correctly, it needs to be regulated. There needs to be rules in place. When those guardrails are removed and the ultra wealthy can take advantage of that so that they can become richer and richer and even more richer and richer, ungodly amounts of money, and then blame the fact that we're in debt on people who are suffering that have nothing, that's a really, really dark place to be at. Anyway, my name is Tom Kane. I hope you enjoyed this video. If you liked it, again, please hit the like button, subscribe to the channel, and by all means, look forward to content daily. Every single day, there will be a video on this channel. I will be covering something or interviewing somebody. I have over 47 people lined up for interviews. It's going to take some time to schedule them. And obviously, with the holidays coming up, I'm going to not really be doing that through the holidays. So look forward to a lot of interviews coming in the next few weeks. But until then, there'll be daily content. And in between those interview videos, I will be discussing different issues related to, business, politics, all this stuff. I am back. I am so excited to do this. I built this entire room that I'm in to make professional quality videos for you guys. I hope you enjoy them. Please hit that subscribe button, and I look forward to seeing you all in the future.